Good day. This is a research study presented by me, Maiden Piabilina, together with Ferry and C. Bravo. The company that we studied was Swiftgood Inc. First, a simple background about the said company. It was incorporated on June 6, 1994. Primarily, the company was organized into two business divisions, the agribusiness and meat divisions. Swift Foods Inc. and RFM Corporation was giving ownership Swift brand to the latter because of the trade license agreement between them in the year of 2012. The company's mission and vision. Their mission is to live our life as life givers, and their vision is to feed the world. Nature of business. Swift Foods Inc. operates in the poultry slaughtering and food processing sector. Description of products. The company has 14 different products. First one is the Swift Crunchy Burger. It was marinated with eggs and aromatic onions and coated with crispy breadcrumbs, 250 gram. Next, Swift Chicken Nuggets with cheese flavor and barbecue flavor, 200 gram. Next, Swift Square Hams. It was meat blended with special spices, 250 gram. Next, Wow Happy Cheese Dogs. It has 3 classes, regular, jumbo, and footlong, 250 gram and 1 kilogram. Next is the Swift Sweet and Juicy Cheese Hot Dogs, 450 gram and 1 kilogram. Next is the Argentina Fresh Processed Meat. It has high quality canned meat, 209 gram. Next one is the Swift Burger Patties, seasoned with fresh onions and eggs, 230 gram. Swift Delicious Bacon. It is thin slices of distinctly smoky bacon goodness, 200 gram, 400 gram, 250 gram, and 500 gram. Next is the Wow Skinless Longanisa, 250 gram. Next is the Swift Cheesy Franks, beef and perfectly seasoned, juicy and cheesy, 500 gram. Next is the Swift Chicken Hot Dog, natural chicken, 1 kilogram. And Swift Some Hot Dogs, smoked brown hot dogs, beef with seasoned special spices, 1 kilogram. Next is the Swift Tenderloin, all meat frankfurters, beef and pork with irresistibly smoky flavors, cocktail and regular, 500 gram. Last is the Swift German Frank seasoned with special spices, 470 gram.
Let's go to the current revenue and size profit. In 2019, Swift Foods Inc. had a sales revenue of 65,181,000 pesos with sales revenue growth of 11.64% and a gross profit rate of 73.65%. Likewise, the company had a net income after tax for the year ended December 31, 2019, amounting to 91,210,000 pesos with net income after tax margin of 139.93%. Major markets served. 70% of their products are sold to its distributors and 30% to supermarkets, restaurants, fast food chain, and others. Let's go to the company's business strategy. The company has a lot of freeze, which is a bad indication to the company. So to limit the risk, the company manages its liquid funds through cash planning on a monthly and weekly basis. The company uses historical figures and experiences and forecasts from its collections and disbursements as well as projections based on the annual business plan. Likewise, the company places excess funds in short-term cash investments. The company also enters into restructuring agreements with creditor banks as the need arises. Let's go to the operation and financial information. A. Market for issuers' common equity and related stockholder matters. No dividends were declared in favor of common stockholders for the years 2017 and 2016. Preferred shareholders are not entitled to receive dividends. Number 1. Market information. A. Common stocks. The common shares of stock of the company are traded in the PSE or Philippine Stock Exchange. The price as of the trading date on December 29, 2017 is 13 pesos, 0.13 pesos. As of December 31, 2017, there are 7,317 stockholders of 1,818,436,953 common shares of the stock of the company. Letter B. Preferred stocks. The preferred shares of stock of the company are traded in the PSE. There are 3,394 stockholders of 48,633,664 issued in outstanding preferred stocks of the company as of December 31, 2017. Number 2 is the dividends. Prior to July 7, 2004, the preferred stock earns cumulative dividends up to the maximum of 15%. On May 12, 2004, the stockholders amended the terms of the convertible preferred shares by extending the conversion period until August 7, 2038 and the put option period until August 7, 2038. On September 1, 2005, the stockholders further amended the terms of the convertible preferred shares by granting the company, as issuer, the option to redeem the convertible preferred shares on any date commencing from the time of approval by the SEC of the amendments and until August 7, 2038 at the offered price. On October 11, 2006, the stockholders removed the term of the convertible preferred shares formerly set at August 7, 2038. Hence, the corporation shall have the option to redeem the convertible preferred shares at the offer price on any date commencing from the time of the approval by the SEC of the amendment. SEC approved the amendment on December 6, 2006. Number 3. Recent sales of unregistered securities. There are no sales of unregistered securities in the last 4 years of operation. Letter B. Management's plan of operation. The company continues to wait for better business opportunities and carefully evaluates various business plans. So presently, only the Palawan branch remains operational and continues to produce quality dressed chicken. However, the plans are underway to increase its production within the next 12 months. The company is in the process of improving the performance of its contact growers to sustain financial viability. There is no product research and development at the moment. So the company came up with the aforesaid plan of operation after taking into consideration the following key performance indicators. So this is the key performance indicator or the KPI and their formulas in the calendar year 2016. Letter C. Financial statements. Attached herewith is an Annex A. Audited financial statement of Sweet Foods Corporation, SFI for brevity as of December 31, 2017. So, there are no advances made to any directors, officers, stockholders or related interests or any affiliates as of December 31, 2017. Letter D. Executive compensation. The company's executive officers are entitled to the following pecuniary benefits: bonus scheme, major benefits, and retirement plan. So these are the benefits that the executive compensation Number 1. Pecuniary benefits. A. Option to purchase assigned vehicle after 6 years at market value or return the same to the company and get a replacement vehicle at such time. B. All expenses related to registration, comprehensive insurance, repairs, and maintenance are to be borne by the company. And reimbursement of gasoline expenses up to the certain amount of liters per month. Number 2 is the bonus scheme. The grant of bonus will be on the basis of performance and attainment of business plan, particularly the specific objectives for the year and in accordance with the company policy. A. Hospitalization plan for the executive officer. B. Vacation leave of 15 days per year, which may be accumulated up to 30 days but it is not convertible to cash. C. Sick leave of 15 days per year, which may be accumulated up to 45 days but not convertible to cash. Letter D. Executive check up once every 4 years, including Spec 23 case at blood test every 2 years. Number 4 is the retirement plan. The retirement plan is available to any individual who has rendered at least 5 years of service, which benefit is equivalent to 25% of the basic pay per year, to be increased by 5% per additional year of services up to the maximum of 125%. And 5 others. The company has no compensatory plan or arrangement including payments to be received from the registrant. So, A. Commitments and contingent liabilities. There are no significant commitments and contingencies involving the company. Others. So, the Philippines continues to experience economic difficulties relating to currency fluctuations, volatile stock markets, and slowdown in growth. In addition, there are commitments, guarantees, litigations, and contingent liabilities that arise in the normal course of the company's operation, which are not reflected in the company financial statements. 1. Subsequent events. There is no subsequent event. 2. Earnings per share were computed as follows. So, net loss attributable to common stockholders divided by weighted average number of common stock. So, we will get the basic or diluted loss per share. Number 3, capital stock. Information on capital stock in 2017 and 2016 are follows. So, 4, deficit. As of December 31, 2017 and 2016, the deficit of the company in thousands amounted to 3,016,158 pesos and 3,004,173 respectively. There is no stock purchase agreement, stock split, or other dividends. Number 5 is the treasury stock. As of December 31, 2017 and 2016, the company has 11,098,270 preferred shares in treasury acquired by the company at 10 pesos per share, amounting to 110.98 million. So let's go to the financial statements. Balance sheet. So the method used in the computation of our forecasted financial statement is the average method. Also, for the outlier or out of trend is not included in the computation because outlier makes the FS unreliable. So, full costing, we computed the income statement under full costing and also variable costing. Also, we computed the ratios. So, also the break-even analysis. Break-even analysis, break-even point in sales, and in percentage. So, our reference is found in SEC Form number 17-A 2018. So,
Thank you for listening and God bless. Sabi pa